but its focus, ICICI Securities, and if you just take a look at the numbers, optically it looks like Q3 has been a bit weak for them. The question, of course, being whether or not business initiatives or new business initiatives are going to aid growth for them. How is it that ICICI Securities is going to plan on tackling competition from discount brokers? And what really is the way forward? So who better than Shilpa Kumar, the MD and CEO at ICICI Securities herself, to join in on the show and answer these questions. Shilpa, morning. Good to have you on the show. Thanks much for taking the time out.
Good morning.
Okay. Now you've reported...
Thank you. Good morning. Happy to be here.
Okay, great. Shilpa, just looking at your numbers, you have reported a degrowth in your top line this time around. What would you attribute this weak quarter to? And also, what will be the revenue mix going forward?
Yeah. So let me start with the revenue mix that we have currently, because then that leads on to why the slight dip that we've seen in revenues. Primarily, roughly about 50% of our business is contributed by broking. And the second biggest, line item of revenues is our distribution business of mutual funds. Now, the last 9 months have been very volatile, muted market sentiment months for the broking market, which really is what has impacted our retail broking business. The second, line item, which is also mutual fund distribution, also has had, I would say, very many changes in the past 9 months, because there have been big regulatory changes in terms of mutual fund commission. And all of these have also impacted the second line item of mutual fund income. Having said that, if I were to kind of, give you two, broad, things to think about. One is that while overall on broking, retail broking was down, I would say that our institutional broking business has done well, has actually shown a growth over the 9 months in spite of muted market sentiments. And the second thing I will say is that in spite of all these changes, 9 month over 9 month, our mutual fund business has also shown, some growth. So that's the two areas I wanted to comment on. If I now step back and look at what is the proportionality, actually non-broking revenue has contributed about 27%, to the distribution business rather has contributed 27% of our revenues for these 9 months.
Okay, apart from brokerage business, how are the other businesses panning out for you?
So like I just explained, that if you broadly break up broking into retail and institutional, our institutional business has done well because, we are continuing to expand our footprint in this space. If I also look at distribution business, it has shown growth, and within that mutual fund income and mutual fund AUM has also shown growth. So if I just put some numbers to it, last 9 months, while industry mutual fund AUM has grown about 14%, our AUM has grown about 19%. The other big trend in mutual fund industry is systematic investments into mutual funds. And therefore, year on year, if you look at even the number of SIPs that we have, they have shown a good trend growth between last year and this year. So if I would put it in a nutshell, I would say that while broking is muted, I do believe that lead indicators on other parts of what we do, which is investment products, those lead indicators are encouraging, and it's helping us with our diversification target of non-broking income to broking income.
Okay. Shilpa, we know that, there are new business initiatives which are going to aid growth for you. And one can see that when you go to an ICICI Bank branch itself, your customer base, there's increased engagement as well. But tell me a little bit more about visibility on your customer base. We know it's strong right now, but where can it head to in, say, the next few quarters, or even for that matter, 1 year to come?
Right. Yeah, so, one thing we are really encouraged by is that the overall unique number of clients who have dealt with us in the last, 9 months, that number is 1.2 million. So we've seen growth in that number of 10%, and we do feel encouraged by the growth in the number of clients who have come to our platform, ICICI Direct. I think we are also encouraged by the fact that, more of our customers are choosing to do a lot more of their savings and investment business with us. So not just broking, but it could be their mutual fund investments, bond investments, and other things like that. And to keep the sharp focus, in fact, in terms of getting clients to come to our platform and also to see the value that is available there, we've focused on a number of things. So if I may briefly, touch upon them. This quarter, we've actually launched 2 or 3 significant initiatives. One is we've really come out with a mobile app for our business partners. What this will do is allow business partners who work with us, so franchisees, to actually benefit from the full power of the ICICI Direct platform. And they can in turn offer to their clients, broking, mutual fund, and every product that we offer there. The second, initiative that we've taken is we've actually launched what I certainly think is a first for the markets, which is our e-ATM product. Again, highlighting some of the value we can give clients in terms of quick liquidity within 30 minutes of selling their shares. So that's money in your account within 30 minutes of selling your shares up to 50,000 rupees. The third thing is we've actually launched an advisory initiative for our Ultra HNI clients. And we believe the combination of value it brings, in terms of accessing mutual funds more efficiently, the advice, the execution capabilities of our platform. I think all these 3 initiatives will help us garner more traction with different segments of our consumer set.
Important elements here. One, if I look at the total IPO business, it's a very cyclical business, and because of tough market conditions, not too many IPOs happened, and in the run-up to election, not too many companies may perhaps like to go public. What kind of dampener could that be?
Right. Yeah, so you're right, that is a dampener for the ECM business when particularly FY18 had been a spectacular year. Having said that, I will have 2 comments. One is Q3 was unusual because the IPO market just seized up and we didn't have a single IPO issuance. So I would say Q3 was very unusual. I think as markets stabilize, we will look to take some of the IPOs to market again in the coming few quarters. We have a very healthy pipeline of IPOs, and it's a question of timing. Certainly quarter to quarter it will depend on market sentiment, but to me it's just a question of timing before these issues hit the market. The second thing I'd like to add on the corporate finance side is ISEC has been extremely busy with a lot of other kind of issues, what we call consolidation issues. So whether it's buybacks, whether it's rights issues, whether it's open offers. So in a sense, there are a number of, consolidation products which we have been very busy with. The last point I'd like to make is that so far 9 months, ISEC has delivered fairly well on the advisory front, and the number of advisory deals we've closed has shown a very good growth over last year, and it reflects our focus on the advisory business.
Challenge perhaps could be, if I talk to mutual fund CEOs, their views that the direct business is growing.
Right.
That could be a trend, and
right.
SEBI is also of the view that the direct business should, or the direct channel should actually progress more. Could that be a change of trend for a firm like ISEC? Because if the way in which you're buying mutual funds, if you are not going through a broker or a platform in this case, that could be a large change of approach
right.
in today's digital environment.
Right. No, so I absolutely agree with you that going direct is a significant trend. And certainly for people who have a good pulse of the market, and are able to manage their investments, I think they would choose to go there. So let me break that up into 2 parts. I think first of all, we think there's an opportunity here for advisory because while people might choose to execute directly, they might want advice in terms of where to invest and what to do and how to allocate assets. And really, this came up in a very significant way in the last 9 months. So market volatility is a time when actually I would say advice is valued, contrary to when there's good momentum and anything you put your money in seems to do well. So I would say that especially for ultra HNIs and HNIs who are willing to actually pay some part of the AUM as an advisory fee, I do see there is an opportunity for efficient direct allocation into mutual funds, but with advice. And I'm glad you asked this, because we've actually launched a product for the HNI community called Direct to You, which combines our advisory with very efficient and direct execution.
Okay, Shilpa, appreciate your time and certainly hope to see much more of you going forward.
Thank you. Happy to have been here.